Folks, I am about to show you the stupidest question that was asked of Jerome Powell. This man, hands down, ruined today in a very bad way. Because let me put it this way. Jerome Powell was normal level of hawkish. He actually had a dovish statement in his press conference statement release. That comes out right at 11 a.m. At 11:30, he talks about, hey, you know, we've got some ways to go, but he's not actually going all crazy hard hawk. Until this one moment. After this one moment, Jay Powell all of a sudden goes to, it's very premature to think about pausing. The risk of doing too little outweigh the risk of doing too much, because if we do too much and we restrict the economy too much, we could just turn the money printer on again. But if we do too little, we cause problems. And then Jerome Powell hammered all of it home by telling us the path to a soft landing has narrowed, and reiterated like 3 more times that no pause in Fed rates. We're gonna keep hiking. Even though the actual individual rates may be smaller in how much we hike in each meeting, that journey's gonna be long. We're gonna be going on a ride for a while. And guess who the person is who inaccurately pushed Jerome Powell in the wrong direction? And it is this guy right here. This person asked the stupidest question of the entire meeting with just 7 freaking minutes left. Listen to the question. Keep in mind, when he says that stocks and bonds are up, he's wrong. They were down at this point. NASDAQ was down like 1.3%. Anyway, listen to this.
Just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that
wrong?
Something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
It's almost like Jerome looks away here and he's like, oh, here we go. You know, I don't want to be the person that's like, yeah, I got to make your stocks go down, but here we go. I got to make your stocks go down.
You know, we're not targeting any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is,
so let's clear it up, okay?
that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher. And that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, you know, the pattern has been that one after another, they go up and, you know.
Listen to this. The guy asked, hey, are you trying to make stocks go down? And Jerome Powell's like, I'm just trying to communicate clearly. We got some ways to go. If we had to decide today what we would do in terms of projecting a terminal Fed funds rate, it'd be even worse.
You know, that'll end when it ends, but there's no sense that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So
listen to that. Literally after the guy's like, stocks are going up, Jerome Powell's like, what? We're exactly where we were a year ago. Jerome Powell's almost like in disbelief here, like, that's it. I got to take out every tool. That's it. No sign we're stopping anytime soon. We'd go higher if we could right now. We'd change the estimate up. Every time we've done an estimate before, we've revised it up. And, we haven't gotten anywhere in the last year. I mean, he's going dirty. No sign of wanting to stop at all. And then he ends up going into, of course, the soft landing talk. Let's just wrap it up. And then I want to show you the sticks to prove that this guy was an idiot and drove Powell off a cliff.
Okay, so I would also say it's premature to discuss pausing.
See, look at that. The guy's not even asking about pausing. All he said is stocks and bonds are up. Jerome Powell looks at his notes. And he's like, oh, yeah, that's right. We won't be pausing anytime soon. Tank, please. Please tank. Everything, please tank. This is like the most manipulated market ever. If that guy has shorts, that reporter, he's freaking brilliant. That's what you ought to do, is you short the market. Tell Jerome Powell that stocks are going green even when they're not. And don't worry, leave the rest up to J. Powell. Oh my gosh.
It's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control those messages, and that's my job.
Keep in mind, from NikiLeaks. Remember what NikiLeaks said? And first of all, look at J. Powell's face there. Look at his face. He's just like, bet your stocks ain't green anymore, bitch. But then look at this. Look at this. You go over here. This is from NikiLeaks. Oh, there it is. Nick T from the Wall Street Journal, right? What do we get? Many investors this year have been eager to interpret signs of a less aggressive rate rise pace. Oh, come on. As a sign that the pause in rate increases isn't far off. But a sustained market rally risks undoing the Fed's work of slowing down the economy. So in other words, J. Powell doesn't want a market rally. He just proved to you, literally just proved to you, that when he was lied to and was told that stocks were green when they weren't, Jerome Powell will go out of his way to ruin it. That was 38 to 41 minutes into the press conference, which started roughly 1 minute late. So if it started at 11:30, we're going to look at the NASDAQ at 30, 40 minutes. That would be about 12:10-ish, right? So minus 2, 12:08 to right about 12:10 is when we got this nasty message from J. Powell, right? Oh my gosh. I didn't even look at this before I started filming this clip, but watch this. All right, look at this. Things start going green right here, right? We got a little bit of red here. We lost the bounce that we had from the dovish talk. Right here, folks. Look at these. Look at these. You see these green candles right here? This question gets asked, like right here. 12:08, 12:09, right around here, the question gets asked. J. Powell starts answering the question right around 12:10, finishes answering the question right around 12:11. What happens right after that? NASDAQ goes from 271, or QQQ, down to 266. 266 divided by 271 to almost a 2% additional decline off of this guy, suggesting that stocks are going up. The guy had a memory of this happening, didn't look at the fact that we had already given that up, tanked the market even more. You know that guy was shorting the market. It's so crazy. But the big takeaway is, in my opinion, and like this should have been obvious a long time ago, right? I mean, I still remember back in February, Sarah Eisen asking Jerome Powell, do you just want stocks to go down? And he's always like, look, we're just committed to getting inflation down. And I don't know why my impersonation of him is like Donald Trump, but this right here is like cold, hard proof. He wants your stocks to go down, baby. So if you're feeling bad because your stocks are going down, it probably ain't your company. It's J. Powell.